This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning into the Planet MicroCap Podcast. You can follow the podcast on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you are listening to episode 20. For this episode of the Planet MicroCap Podcast, I spoke with Mike Corbett, CEO and Portfolio Manager for Perritt Capital Management. One thing I hear quite a bit from MicroCap CEOs and management is their desire to meet with institutions. According to Investopedia.com, an institutional investor, and I quote, is a non-bank person or organization that trades securities in large enough quantities or dollar amounts that they qualify for preferential treatment and lower commissions, end quote. Investopedia.com goes on to break down what this term implies, and I quote, watching what the big money is buying can sometimes be a good indicator, as they supposedly know what they are doing, end quote. In past interviews on the podcast, I recall that the goal as a MicroCap investor is to find those companies before they get institutional coverage for this very reason. The expectation that once the institutions get involved, the cat is out of the bag, so to speak. So I wanted to understand this a little better. Who and what is an institutional investor, and key in on what they look for in microcap stocks. The goal for this episode is to learn about what a fund is, in particular a microcap fund, and if there is a difference in philosophy for investing between an institutional and an individual investor, understanding Mike's due diligence process and his advice for investors looking into investing in microcap stocks. Thank you again for tuning in to episode 20 of the Planet MicroCap Podcast. Please enjoy my interview with Mike Corbett, but first, a word from our sponsor.
A comprehensive streaming of market data, research, and portfolio management application for you. QuoteStream is a real-time streaming quotes and research system designed for the day trader, retail investor, institutional investor, both new and old. QuoteStream offers low-latency, tick-by-tick data, advanced charting, comprehensive technical analysis, news, and research. With no software to install and no servers to maintain, QuoteStream is the ideal solution for you. Go to stocknewsnow.com and start your free 7-day trial. Click the QuoteStream banner in the header or real-time quotes in the nav bar to get started building and managing your investments.
For this episode of the Planet MicroCap Podcast, I have Mike Corbett from Perritt Capital Management on the program. Mike, welcome to the Planet MicroCap Podcast.
Thanks for having me.
It's my pleasure. So to get us started off, what is your background and how did you get into microcaps and land at Perritt?
Well, it's the short story is really the person who started this firm, Dr. Gerald Perritt, was a professor at DePaul University here in Chicago. While he wasn't one of my professors, there was certainly a connection with DePaul University and this firm, so I actually started working here as an intern while I was in college. So I started learning about microcaps through Dr. Perritt's tutelage. Working on newsletters and all sorts of research projects, and just worked my way up. So that was nearly 30 years ago, and here I am today, the head of Perritt Capital, and deep enthralled into the microcap world.
So briefly, for our audience that may not know what a fund is, and a microcap stock fund in particular, what exactly is it?
Well, first off, our strategy can you can purchase it in a separate account or in a fund or a mutual fund. So obviously, if anyone knows what a mutual fund is, it's basically a pooled vehicle of investments, and in this case, a pooled vehicle of individual stocks, particularly microcap stocks. So, and then microcap stocks. It's interesting because when I first got in the business and when Dr. Perritt first got in the business, they were actually just called smaller cap stocks or small company stocks. But over the years, the term microcap came along certainly from the standpoint of the smaller of the small, that was very thinly traded stocks or very illiquid or underfollowed stocks, and that new classification was started some nearly 20 years ago. But basically what a microcap stock is, if you just rank all of the companies by market cap and sort of separate the bottom 20% to say that's truly the smallest of the small, and then separate that to call it, true smaller microcap stocks. It really is about somewhere between a 300 or 400 million market cap cutoff threshold. So companies that have market capitalizations of less than 300 or 400 million are really kind of considered microcap stocks. And really, the way you calculate that is you just take the number of shares a company has outstanding by its current stock price at any given point in time.
Okay, so at Perritt Capital Management, why does a fund and the Opportunities Fund in particular exist to invest in microcap stocks? What do microcaps have to offer?
So we have a couple different strategies. Our flagship fund is the Perritt MicroCap Opportunities Fund. So we use that term because we really will go to either side of the value or growth side to find unique and interesting investments or opportunities. So that's why we use that terminology for the name of our product. Now, our other product within the microcap world is an ultra microcap. So we'd actually just call that one Perritt Ultra Microcap. That's companies really in the small of the microcap world. So it's all sub 100 million market cap type of companies. So what do microcaps have to offer? Boy, that is a truly uncorrelated asset class relative to the rest of the equity investing world. So it is a unique and an interesting asset class to add to one's portfolio to help with diversification purposes.
And with that in mind, what is your investing philosophy? How do you evaluate microcap companies? And is it different from the perspective as a fund as opposed to, an individual investor like me?
Not necessarily in terms of the latter question, but in terms of our philosophy, we really kind of summarize our philosophy and our approach really into three quality measurements. So as we go through, any kind of investment, but certainly in the microcap world, we put each of our companies through three quality screens. The first one of which is a quality of financial statement. So we actually have a 9-factor test that we use. So it's 9 factors that we get off of the 3 financial statements. And if a company gets at least 3 of those factors, or 6 out of those 9 factors, then we consider it to pass or have quality within the financial statements. And then the last 2 are much more qualitative. So that's much more of experience, since we've been doing it a long time. And but it really is back to, so the second one is quality of the management of the product. And then the last one is the quality of what you should be paying for a particular business. And you really do that by comparing that to that of the market or that of maybe its industry or competition in terms of what you're paying for the business. But those are the 3 quality measurements that we put through. Now, in terms of difference from one individual investor to a portfolio, it really kind of comes down to the time horizon, the risk tolerance, how much concentration you're willing to take. We as institutional investors and running as a mutual fund, we practice broad diversification. So we really like to see a lot of companies within our portfolio, so our investors can handle the volatility, because the microcap world has extreme volatility on a day-to-day basis, week-to-week, month-to-month basis.
One quick follow-up I had to your investing philosophy, where you said you had the 9 factors within the financials, and you said if it hits 6 of them, what, if you like, what are all 6 or even just a couple of them, just, for our audience that might be interested in, looking at those factors as well?
Sure. So there's actually 9, so we want 6 of the 9. Right. And I'll give you a couple of them, and we don't really give them weights. So we really want to see at least just any 6 of the 9. But some of them are things like gross margins are expanding, their shares outstanding are staying constant, the debt that they have on the balance sheet is either zero or is being paid down over time. So with this 9-factor test, we look at it over the past quarter, the past year, and then look at it over several years. So we want to see consistency with this test to see that the company is managing their financial statements in what we think is the proper way, or in other words, a way that should enhance shareholder value in the future.
You know, this actually leads into my next question, and it has to do with due diligence. You know, so like, what is your due diligence process? You know, can you name a few of your criteria, and like, and how is it part of your investment process?
Well, you know, I already, in a sense, gave you, our 3 quality measurements. So that's really the broad scale part of our due diligence process, is going through each of those 3 quality measurements. But to really dig deeper into that, it really has to do with meetings with management. So whether that's a meeting with management in person or over the phone or both, and then doing all sorts of other due diligence of, investigating the product, asking customers, doing other so-called channel checks to see how their business is improving, and to see if management, what they tell you, is really true in terms of how this product, service, whatever it may be, certainly is of high quality, and that you can see what they're trying to achieve. So it really kind of comes back always to management, particularly within the microcap world.
You know, it's I got to say, on our podcast, the one main thing we've heard a lot is it's really all about management. You know, you can hit all your different measurements and this and that, but at the end of the day, when you're talking about, especially when you're doing your qualitative due diligence, you really got to make sure management is good. So in your experience, this is a follow-up to your answer is, what are some of the qualities that you look for? I mean, you said, I think, one just now at the very end there, but, what are some of the other qualities you're looking for in management?
Well, you have to do the sort of somewhat background checks in a sense. So really, what I want to see is what's their history in terms of how long they've been running the company, or maybe other companies that they've worked for. But a really easy one that the average individual investor can use, that we certainly use, is dig into their compensation. And we always prefer to see management teams, CEOs, CFOs, and the like, that have compensations that are much more oriented towards stock ownership as opposed to their cash compensation. So we want to see big multiples of that in terms of what they own and own outright, not necessarily just from options, that they actually own a fair amount of stock, and they're going through what we go through as shareholders, the day-to-day volatility of that particular investment, so that they're in a sense on the right side of the table with us.
Yeah, I hear you on that one. So, taking a quick divergence, I want to know, for you and the fund, how important is liquidity and the ability to trade in and out of some of these microcap stocks?
It's important, but it's not. So we certainly, don't. Since we're an institution, there's a certain size that we manage. So some securities are too thin, or don't trade enough, so it's hard for us to get involved. But with that said, we actually always like to view ourselves as owners of the business rather than traders. And when we hear the term liquidity or trading ability of a stock, we think it's related to a trader who wants to buy and then sell the stocks quickly. We're not that way. We've actually made a lot of investments over our history that we owned not only days, but sometimes weeks, months, or even a year worth of trading volume, if you look at the average trading volume in terms of that way.
Mm-hmm. It's interesting that you say that, because I've read so many articles from different types of investors that in the microcap space, where they say, liquidity is not always the most important thing. If it's a good, solid business, you want to invest in the business. You're not, and you want, like what you said, you want to own the business, as opposed to, being able to. The most important thing shouldn't be whether you can trade in or out of it, because at the end of the day, that's not really the true mark of a microcap investor. You have to understand that these companies take some time to mature.
Yeah, absolutely. We completely agree.
Okay, so my next question is, and this might be somewhat of a silly question, but I have to ask, how hard is it to invest $100 million or more dollars in microcaps?
Believe it or not, depending on the time frame or the current environment, it's actually not that difficult. So, if you're trying to put $100 million into half a dozen or a dozen stocks, okay, it's difficult in a short period of time. But we really believe that you need to have multiples of that. We actually typically hold anywhere from 70 to 100 names at least in our portfolios. So when you're putting 70 names to work at $100 million, that's actually not that difficult in a short period of time.
And is the fund sector agnostic?
Yeah, we are pretty much what they call in the business bottom-up stock pickers. So we really don't care too much about how it is. With that said, we do look at what sort of others do, or certainly the indexes look like, so we can compare ourselves and do attribution analysis to find out how we're performing relative to that, or the way the benchmarks may come together.
And in the management of the fund, one thing I really want to know is about cutting your losses. Like, is there a percentage down that you then at that point have to either buy or sell certain stocks, and do you buy more when it moves up a certain percentage? Like, how does that work?
Stop losses, as they say in the business, don't really work in the microcap world. That is my experience, and the experience I can tell you from that is, I unfortunately, or for whatever great lessons I've learned, I've had plenty of investments that I've made that went down 30, even 40% or more after I first purchased them, and then they became big home runs from there. So it just doesn't work, because the volatility, the nervousness of the markets can have that, but you have to be able to stomach those types of movements in the space. Now, one of the questions you also asked is about adding as it comes down, and I will tell you that's probably more of a 50-50 mix in terms of what our history or what we've done in the past. So sometimes we add more. I tend to always lean toward not, quite honestly, because we want to make sure that maybe we're missing something. Because sometimes, as they say also in the business, the market's smarter than you, and maybe you miss something. So you should just wait to get confirmation. Now, once we get confirmation, and there's a question of what's the confirmation. The confirmation is news, is events, is further meetings with management, and then you can build your confidence and then add to the position. So it's not just a boom, just add more. It really is about doing more homework.
So then what are some of your criteria for, like, when you decide to eventually get out? Both if the stock is down and or up.
Most of it's back to the question we talked about several times ago, which is management. So we don't really, in a sense, admit our mistake because the stock went down or because they missed a number by whatever number that is. We typically will admit our mistake when management starts doing something different, or they start using excuses or saying something different than what they told us in the beginning. So it's usually reserved to those types of things. Now there are other competitive issues that could pop up, particularly with a tech company, where a competitive landscape could change dramatically, or some other regulatory issue could change dramatically, and then we might admit our mistake. But I will tell you that most of them are reserved to management issues.
Okay, so here's a fun question. This that I like to ask a lot, and it has to do with when you is finding some of these stories. So what's an example of a story that that for you was just an undiscovered one that ended up being either a big win or a big loss? You don't even have to name the company, but just like an experience in which you were like, wow, I never realized that this existed, and it's MicroCap. Oh, cool. All right, here we go.
No, as I said before, I've been doing this for 30 years, so I could give you a lot of examples, both positive and negative. But I'll give you one of a recent example that we've had that turned out to be a big winner, and how the stories can change. So, and this one, your listeners may know the company, but didn't realize it was a microcap company. Was a company called John B Sanfilippo. Now that name may not mean a lot to people. The name that may mean a lot to a lot of people is Fisher Peanuts.
And real quick,
and
Mike, real quick, is the fund currently shareholders or no?
Of John B Sanfilippo?
Yes.
What I will tell you is we own a small amount, but we've sold a majority, well in excess of a majority of our investment.
Okay.
And you'll hear more as I tell the story.
Gotcha.
So John B Sanfilippo was a company 7-8 years ago that we first made an investment in the company for a variety of reasons. One of which was great brand name, great business. The issue with it was family owned and family controlled, and sometimes those types of businesses or companies that are public don't necessarily have shareholder value in mind or at heart. So this is a company that was run for the family and just happened to be public. That's the way we would view it. But that really changed a bit many years ago because management or the family brought in some outside management and really started running the company more on a shareholder basis to us. So that's really what changed. So this was a company that was $100 million market cap that had $600 million in revenue. That initial dynamic really attracts us, but there really wasn't a lot of money coming to the bottom line. But that changed with some of the businesses, the way they developed the business, but also because of the management team. The stock in round numbers was a mid-single digit type of number. It got as high as between $60 and $70 a share earlier this year. As I said, we've sold a material amount of the position, but still own it today. So that's just a quick example of how rewarding an investment can be. But it really is about doing your homework and understanding the dynamics and how it's changing.
And Mike, I'm so sorry. I cut you off when you were explaining what they did with the Fisher Peanuts. So I guess real quick, just for perspective, what did they do? They didn't really do anything other than start to diversify their business a bit more.
Oh, okay.
They still have the Fisher Peanuts. You go to most major ballparks across the country, and you'll see Fisher Peanuts, particularly in the Chicagoland area, because they are a Chicago-based company. So both the ballparks here have Fisher Peanuts in there. But that's part of my story is new management as well as a presence and a mind to say, okay, we're going to diversify the product line into other things other than just Fisher Peanuts and a few other products that they had at the time.
Okay, Mike, so we're about to round the bend here. I got to know, what's your advice for investors who are looking at investing in microcap stocks, like for new investors?
I know it sounds cliche, but I always say investigate before you invest. In other words, do your homework. We have a lot of sophisticated tools here since we're an institution, so we have databases that we pay a lot of money to get data and to do analysis and to calculate our 9-factor test I talked about earlier, as well as other tools we can use. But a big tool that you can use to do your homework is to just go to the SEC's website, sec.org, and pull in the financial statements, which would be a 10K or a 10Q, and there's also various 8K filings that companies file, and just start reading through that. That's what you need to do. You need to do your homework that way, and even calling up management. And that's the one thing that's really also fascinating for individual investors. Companies within the microcap space, the management teams, maybe not all the time, but a lot of them will take your call. Try calling a large cap company. Large cap companies won't even talk to me. but the smaller companies, they'll certainly talk to institutions like myself, but they'll even talk to individual investors as well. So you can actually talk to heads of companies, and that's just a great, awesome thing to hear it right from the leaders.
And Mike, what resources would you recommend? I know you said SEC website, but what other resources would you recommend to investors to go look at?
Your basic Google or Yahoo finance things has some quick tools to just pull up news and pull up information. So you can certainly use those tools just to at least get the basics. But I really push back that you got to go back to the 10K and the 10Q.
All right, Mike. Thank you so much for coming on to the podcast. And where can our audience go and find more information about you and Perritt?
The easiest way, just to go to our website, which is perrittcap.com, and I'll spell it for you, PerrittCap.com.
Mike, thank you so much, and have a great weekend.
Great, thank you.
Thank you all for tuning in to the Planet MicroCap Podcast, and thank you, Mike, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next Planet MicroCap Podcast, where we'll have our next guest to discuss all things microcap. If you have any questions or comments about the podcast, please send an email to info@stocknewsnow.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official MicroCap news source, and the MicroCap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone.